Welcome to another episode of the Real Estate Investors Money Matrix podcast. I'm your host, Scott Ulmer. Have a really neat guest today. Her name is Edna Keep. She has pink hair. Can you believe it? Pink hair. If I had hair, I'd probably have pink hair too. I wore my pink shirt in honor of her. She's an amazing guest. She has a great energy. What I like about her the most, in spite of her success and how she sets her goals, is her mindset. She understands the power of the mind, the power of your subconscious mind, how you can set big goals and achieve them, how you can manifest anything you want in your life, and how you're not limited by what your parents taught you or by what society tells you. And when you can shift your mind to get out of that mindset that is kind of common and what other people think and what other people think is possible for you, you have the sky's the limit. And she's a living example of that. Came from being a single mom at 16 years old, living in very humble subsidized housing, to becoming a multi-millionaire, just with a great outlook on life, and really excited for you guys to watch this episode. It was a great guest. And so let me go ahead and introduce Edna Keep. All right. Well, guys, honored to introduce my guest today, Edna Keep. And as I said to Edna, I've got a special color shirt on to match her hair. Edna, thank you so much for being with me. I'm honored to have you, and welcome.
My absolute pleasure. Thanks for having me.
Yeah, thanks for being here. So you're up in Saskatchewan, and I'd like to give just a brief bio on you, but really would like you to kind of tell us and our listeners a little bit about more what you do. So I know you like the multis. You're into the multi-family and really more of the kind of 200 and up type doors, and I think that's kind of variations. I've got lots of questions how you got there and what your stepping stones were, but can you give us just kind of a brief background on you and what makes you tick?
Sure. Well, I was first introduced to real estate when I was a financial advisor selling mutual funds and life insurance. And I had clients coming in wanting to take some money out to invest in real estate. And I go, why would you want to do that? That's an asset class that pays you like 3%. I did not understand real estate at all. And we got introduced by a client. He said, well, you should check it out. And he says, there's some pretty good stuff happening. And so I did. I took Robert Kiyosaki, first of all, an evening training and then a 3-day weekend training. And at the end of the 3 days, we signed up for the year-long training and never looked back. 2 years later, I sold my financial planning practice and we went into real estate full time. A lot of people thought I was crazy because I was making between 250 and 300,000 a year, working about 3 days a week. And especially close family members, they thought, oh, you got it made. Why would you go start over again? And it was just a real desire, and we're really happy we did.
Fantastic. And how long ago was that, if you don't mind me asking?
2007. 2007, we were introduced to real estate, and I sold my practice in 2009.
Gotcha. Well, I got to tell you, if I were one of your friends at that time, I'd have probably thought, that's given up quite a bit. So we talk to a lot of folks, and we do some training here as well. But people that are looking to really change their lives for a lot of reasons. Most of the driver is financial, of course. So here you come from a great opportunity, a great situation. And you said, I see something better on the other side, and I'm going to go for it and go gusto. And you jumped in with both feet.
Yeah, we did.
Well, and for those listening, 2007, 2008, and I know it was a little different up in Canada. Some of your lending laws have kind of guarded some of the corrections, if you will, in the market and the price drops. But September of 2008 was not a very fun time around here. I personally lost everything, and so there were a lot of folks, obviously, that lost a lot, and there was a lot of corrections in the 2008 crash. You actually sold your business and decided to get into real estate at the time when a lot of people were probably running for the hills. Did that play into your decision at all, or was it somewhat buffered up in Canada where you were?
It was very much buffered. We actually went shopping in the US in 08 and 09 thinking, because we knew that there was some real bargains to be had, but our challenges was getting financing, as it was most people, even in the US, let alone being foreign nationals, that we could get financing. But at home, we could get really good financing, and our market was on an upward trend there. For example, we had bought a fairly new house in 02, and between 2002 and 2007, when we started looking at real estate, our house had almost doubled in value in our area. So that's what was happening in our area. And then the next probably 5 years was still a really like exceptionally good market. Now we're a little bit flatter, actually back into some opportunity stages. But at the time, it was the best place for us to be investing.
Very good, very good. So you hop into to Kiyosaki, who I'm a big fan of, and was the training geared more towards single families, or was it for multis from the beginning for you?
Well, it was very general when we started, and we didn't know which way. Like we knew nothing. We owned our own house, but we didn't own any rental property or anything, and so we didn't even know what was possible at the beginning. And I still remember sitting at the end of the 3-day weekend, and the trainer was asking us what we thought we wanted to do and if we wanted to go on and learn more, and we said, well, we definitely do. And they were trying to get us to set a goal, and I said, well, I don't know, 5,000 a month, 50 doors, 5 years, 10 years, no idea, like no idea. So when we hit that goal in 18 months, it was like, whoa, we blew our own socks off, if you know what I mean, and that's when we started to see the real value. And the last purchase we made at the end of that 18 months that pushed us to 50 doors was a 24-unit apartment building. So we decided right then and there that we were going to focus on apartment buildings. By then, we'd already pretty much hit our max of what we could even get for lending opportunity with houses, which is what I find with most people, 3-4 houses and they're done. I think we got to 11 just because of our net worth and our incomes and stuff before we were cut off. And then I was sitting with my realtor one day and I said, yeah, I think we're going to buy 20 more houses this next year. And he said, and why don't you just buy an apartment building? And I said, oh, I can't. I don't own enough houses. That's kind of an automatic way of thinking. I said, I think I must have played Monopoly too much, because as soon as I came out of my mouth, it was like, But anyway, he said, no, you could buy an apartment building. And I said, well, really? Well, tell me more. Cause I didn't know the criteria, didn't know anything. So he told me, and he owned apartment buildings too. And so before I left his office that day, I said, well, that was really interesting. What do you got? Do you got an apartment building I could buy? And he said, as a matter of fact, I do. He says, I have a 24 unit that I'm just listing today, and it's going to hit
Wow.
MLS tomorrow. And I said, well, what would it take for it to not hit MLS? And he said, it'll take a full price offer. So before I left the office, I wrote a full price offer and we got it.
Fantastic. Let me rewind the tape here. You said a few things that were very interesting. So go back to your goal. So you were kind of taking a shot in the dark. It sounds like didn't really have a basis for, how I'm going to come up with this goal. And I've got to tell you, I'm big on goals. I'm very studied. And in fact, I read something really neat the other day. I've got 3 kids, and it was an email about not placing limits on your kids and what they can accomplish. And you've heard this before. Most people have, but so many people learn from what their parents taught them, from what their parents learned from their parents, and people look at what's in their bank account today and where they are today, and they say, well, I can only achieve my goals based on my circumstances today. And it's so limiting, and I think it holds so many people back. So you weren't in that same mindset, clearly, but you also didn't have really much of a basis for how you were going to formulate your goals. So how did you kind of come up with that, and can you define those goals one more time, and what happened in those 18 months?
Sure. Well, you know what? We thought right from the beginning, man, if we could make 5,000 a month extra, because we had no intention of quitting what we were doing. My husband's self-employed. He liked what he is doing. I liked what I was doing. We had no intention of quitting. So we thought, yeah, 5,000 a month would be good. And we were taught right at our initial training that if you could get, $100 a door or something like that, that would give you reason to buy the property. And they were talking, of course, mostly houses and stuff. And so how we ended up hitting it is we started out with that idea. We bought a couple of condos. They cash flowed us with $200-300 a month. So we thought, well, maybe it won't take us 50 doors to get to our 5,000. And then and we were able to refinance those properties relatively quickly and pull our money out. But our third property was a duplex, so an up-down duplex. So we already got a feel for multiple doors under one roof, and all of a sudden our cash flow went from $200-300 a month to $1,000 a month. And this was on a little $160,000 house, which we bought with none of our own money. So the first two, we used equity out of our home. As well as our education, because my money was in mutual funds at the time and the market was down and I wasn't going to take anything out of there. So we used the equity. And that one where we bought it with the no money down, we knew that very quickly we're going to run out of our own money. And one of my favorite classes that Robert Kiyosaki taught was creative financing. So we learned about other people's money and how to do that. And it was a financial advisor, so I was used to talking to people about money. So we approached the seller about a vendor take back, seller financing, and she ended up funding the whole down payment for us just on a promissory note. And I can't remember, but it was about 160 a month we were paying her. We were going to get her paid out in 5 years. We ended up paying her out in 3 years. But that little house, because people said, well, you kind of overpaid for that, and we did. But the key for us is that we got it with none of our own money, so probably we still got it financed right up to 80%. So it wasn't way out, but I had people say to me after, oh, would not have paid more than 150 for that. And I said, yeah, well, that's the difference between you and me. I bought a property that cash flows me $1,000 a month, and you wouldn't have bought it because it was 10,000 more than you would have paid for it, right? You're stepping over dollars to pick up dimes, buddy. But a lot of people don't get that. They don't get that. It's all about grinding. And for me, it's about growth.
That's a great point. In fact, it's one of the things that we specialize here in is creative financing, and I find the same challenge with people. It's the psychology, the mentality is, as we tell people, we're big fans of making multiple offers, a cash offer and a terms offer. And on a terms deal, you can afford to pay more because the value of the money isn't today. You're walking in with not a nickel out of your pocket, cash flowing instantly, and you have the benefit of time, and you lock into the price. And I mean, there's just so many reasons, but for some reason, that's a concept that's hard for people to understand, that you can overpay a little bit or pay more than you would because you're not paying cash. And so to see that up front, I mean, kudos, of course, but that shouldn't come as a surprise just from the brief time that we've talked. And so, all right, so it was in these 18 months, you had this goal, you guys are plodding along, and before you know it, you hit it. Sounds like you had some singles in there, and then you ultimately picked up a 24 unit and you hit the goal. Go back to the part about the kind of the lending limits. That's something that I want people listening to be aware of. So you're getting started, you're looking to buy, rent, hold, to grow a portfolio or establish a portfolio and grow it. When you are dealing, if you have a W-2 job, obviously banks really like to see that, so they see consistent income outside of the rental. And I've always found that's kind of a tidbit for me. I've known people that have had to live off the rental income, and that can make renting very challenging when it's more of growth and long-term investment, and you don't have to live on it. You've got kind of that other income, W-2 or otherwise, can make it a lot easier of a go. But when it comes to lending limits, what's your experience from the comfort level of banks? And folks listening, what should they be aware of as far as when they want to grow their property? What's kind of the cutoff in your experience where banks kind of get a little bit, they've had their fill, not ready to give more money?
Well, nowadays with my students, I'm seeing between 2 and 4 houses, depending on where they're living. And that's their limit. They'll cut them right off. Back when we started in 2007, we got, I think, to 11 before we got cut off. But we knew we were going to get cut off at some point, but we'd ask them, is this our last one? And they'd go, no, you're good. So we'd go buy another one. Is this our last one? No, you're good. And then all of a sudden, nope.
Oh, you're not good.
No, you're not good. And we even lost a deposit on a house, $3,000, because we bought 3 houses in 1 month. And so the first 2 that we bought, we made an offer on the first one, but it had a longer closing date. And in the meantime, we bought 2 more and we closed on both of them back to back. And then when we went to close the third one, they wouldn't allow it. And so we lost our $3,000 deposit. But you know what? It was so worth it for us. It was like, no big deal. Just here you go. Sorry. Did not know that was going to happen. We already had been approved, but they felt we were too aggressive. We bought 3 in like the course of a month, and they thought that was too much. And that was kind of our last our last kick at the cat. So I find nowadays, most people though, between 2 and 4, and then they're stuck.
Okay, so you get to 11 and you lose a deposit. So the bank says, we've had our fill. You're at the limit that we're comfortable. And even going to other banks, I mean, I guess you could certainly maybe find another one that would lend, but certainly there's going to be some debt to income. They're going to look at things and their comfort level is going to be what it is. So what did you do at that point?
Oh, you know what? We went to joint venture partners and we started getting our partners to put the down payment, closing costs, and put the title in their name. And then, so we found the deal and managed the deal, because a lot of times we were changing single family homes into suited duplexes. And so we would do all the work, and so we had a sweat equity position. So then we did another, whatever it was that took us to 26 doors. We did most of them like that, although we had a couple rent owns in there as well, that with properties that we had bought, and then rent to own them out again with investors, mortgage ability, and capital. And so, yeah, so that's kind of how we did it in between. And then again, that's why when I was sitting in front of that realtor and I said, yeah, we're going to buy 20 more houses, the plan was to continue doing what we did in the last year, which was bring in all investment partners.
Gotcha. And so, so let me ask you a question specific to that. So, as far as percentage, if you don't mind me asking, a couple of these are too personal, tell me, and I won't probe too far, but for curiosity and joint venture partner. So you find the deal, right? You're bringing the deal to the table. You're going to be overseeing it, sweat equity, converting it up, increasing value through some of the upgrades that you do, increasing rents, the whole 9 yards. What percentage does the joint venture partner get in a deal like that? And maybe it's not cookie cutter across the board, but can you give me an example of what kind of cash they're putting up and what kind of percentage they would get?
We were typically getting 20% down, buying around the $300,000 range. So between 60 and 90, maybe the most 100,000, depending how much we had to put, because we also got them to put the renovation money for renovations. And then we typically went 50-50. There were times that we had the cash to do the deal, but could not get the mortgaging. So we got somebody as a joint venture partner to just do the mortgage, full joint venture partner, and then they got 25%. We got 75%. So we did a few of those as well, but typically 50-50.
It's a great piece of information. We've got some of our partners that have kind of made the progression from single family to multis, and I find that seems to be kind of a common path depending on what your long-term goals are. And they have the same challenge. They got to a point where their lending limits were essentially capped, and now they're looking for some joint ventures. And I was chatting with them just a few weeks ago, and we were talking about what kind of splits would be fair. And at the end of the day, as I said, one of our phrases here is you want to have a seat at the table. Obviously, if you're the only one sitting at the table, that's a good thing. But sometimes you got to have others sitting there with you. So splitting it up in half and giving them 50-50, it seems more than fair. Did you have a buyout option in there for you? Did you have the ability to buy the partner out, or were they in the deal for the long haul?
Mostly we kept them for the long haul because we knew that we were going to have not the ability to get the mortgages ourselves anymore. So we planned we would either hold it long term ourselves with refi at roughly 5 years and get them all their principal paid back, and then we would hold it long term. And with some cases, we just decided to sell out and split the profits in the next 5 years. So we had a few different options there.
Very good, very good. Now you're a goal setter, it sounds like.
You bet. Goal achiever, I like to say.
One more time.
I like to say goal achiever as opposed to.
I love it. Yeah. I love it. That's very cool. I like that. So what's the secret to you setting goals? When do you set goals? How often do you review them? And how far out do you set them?
Well, I like to set big goals because I've learned that if you set them too small and you hit it, then you kind of get complacent the rest of the year. And I've done that before too. And then when I even come close to hitting that goal, then I'll double down, because I've learned, again, you set big goals, it's more likely to happen than if you set small goals. And I've also learned, because over the years, starting, like my background story to that is I was a single mom at age 16, living in subsidized housing with the daughter in subsidized daycare. So I came from a very, I wouldn't say we were in poverty. We were a low income family, lived on a farm. So, a lot of our stuff was supplied, but on my own, I was in subsidized housing, subsidized daycare, always worked. But the income was low. And I just always had this feeling that I just wanted to be rich. I liked watching those shows. I liked getting to hear the stories. And I had family members tell me, oh, Edna, you just got to learn to live within your means. Like, really, you got your grade 12, you don't even have university. How do you think you're going to get rich? I don't know. There's got to be a way. Who do I know that's rich? Well, I have one cousin that's rich. He's in finance, maybe something in finance. That's how I ended up as a financial advisor. And I determined back then that instead of learning to live within my means, I want to learn how to be rich. And you know what? That focus is the difference. Making that decision is the difference. I watch, do you ever watch TikTok? Do you ever go on TikTok?
Yes, and I have some family members, including my 15-year-old daughter and wife, that cannot get off TikTok. So very familiar.
Oh, well, I love TikTok. I get a lot of algorithm manifestation stuff and law of attraction stuff because I like listening to that. But you know, not too long ago, I watched a lady on there talking and teaching people about, you know, inflation's going up and food's going up, and I'm going to teach you how to clip coupons and da da da. And I went, oh my gosh, talk about studying poverty. Like who wants to study like that was so blatant to me what she was doing. And yet I a couple of times went to say something and I went, no, I'm not going to go there, because she cannot think about studying wealth. She can only think about studying poverty. And I thought, okay, there was something that I didn't even realize really what I did. But I decided many years ago I was going to be rich. And I never, ever wanted to clip coupons. Like that was just not going there. I wanted new vehicles. I wanted new houses. I wanted trips. I wanted, you know, but people study that. People study poverty. Isn't that sad?
It's sad, and that's probably the best word for it. But what's interesting is that you saw that immediately, and 99% of the people probably would not have. They would have taken that as educational, as informative, and not seen it the way you did. And I find that profound. It's a mindset. It's a mindset shift, and then ultimately a mindset that you live by. And by the way, the family members that were telling you to live within your means, we've got a word for them. We call them dream killers, and they seem to be everywhere. And it's a shame. In fact, I was having a conversation with my daughter about this just last night, that many people don't mean to. It's not the intent to be a dream killer. It's not the intent. They actually think they're doing a solid for you by giving you this really sound advice, right? Yeah, but if you listen to them too much, there's not gonna be a lot of change in your life, and you're going to pattern yourself after them at some point. So, I really connect with that. So you set big goals. Do you set them on a yearly basis? Are you kind of more of an annual goal? I know you've mentioned 5 years as a plan for some of the cash outs. What kind of timeframes do you typically look when you set your goals?
For sure annually. And then if I hit it or start getting close to hitting it, I always move it up before I hit it, because I don't want to get to that point. Because like I said, I've done it before. My goal's here. You get there halfway through the year and it's like, oh, sit back and you don't do anything the rest of the year. It's almost like a thermometer thermostat. So I've learned that the best driver for me is to always have a new one. And I also believe that, you know, goals are meant for you to grow. They're not necessarily meant for you to get, because you're never going to be happy with whatever goal you get anyway. You're just going to keep, you know, if you got the right mentality, as far as I'm concerned, you're just going to keep growing. And also why I'm not scared of challenges or failures, because I think that every challenge actually helps you set bigger goals. Because if you can't handle the challenge here, how the heck are you going to handle the challenge here? So I've learned to say, why is this happening for me? As opposed to, why is this happening to me? Because it's always happening for you. What happens here, you can't get to the next stage unless you deal with that. Just as an example, dealing with one of my students right now, she's in a province in Canada where it's a very landlord friendly province. And she got stuck with a tenant who was not paying her rent. And so she's all worried and she's frustrated and she's fuming about it. And I said to her, why do you think that's happening for you? And she couldn't get there. And I said, let's think of it this way. You just told me you want to move into multi, dealing with 24, 48 units. And I said, this is what, house number 2? She goes, yeah. I said, you got to handle the challenge at that level before you're going to be able to go to that level. And I said, even what you're telling me, how frustrated you are, how mad you are, how everything, it's going to be hard for you to think about managing 24 doors when you're very frustrated handling 2 doors. And that's just a mindset shift, because I work a lot on mindset with my students, because that's just a mindset shift. And, a 15, 20-minute conversation, she totally could see that. And before she couldn't. Why is this happening to me? And it's never happening to you. If you're setting those goals, some of the stuff the universe gives you is just helping you get there. And it sometimes feels like kicking the ass, but it's still helping you get there, right?
It's all how you look at it. It goes
It
right
is.
back to the psychology of it. I think that's just so spot on. So, well, tell us a little about, you got to a point, when did you start teaching people and teaching others what you do? How did that start? And tell me a little about that today.
Sure. Well, it kind of started organically. We never set out to do that, but people just kept asking us. We go back to the Robert Kiyosaki conventions. We were inducted into their Hall of Fame 18 months in, and people would, how'd you grow so fast? Like, I got stuck at 3-4 doors. Like, how'd you grow so fast? And I started realizing all the stuff that we did differently, like stepping over dollars to pick up dimes, partnering with the right people, hiring coaches, like, and so I started just telling people what we did differently than them. We hired property management from day one, because it didn't make any sense for me and my husband to do work at this price level when we were already earning money here. But a lot of people, they're going to save that money. They're going to save that couple $100 a month.
Dollars and dimes. That's stepping on the dollars.
Yeah, exactly. So that's what I started teaching people, how to have that mindset shift and start to think bigger and start to, stop doing all that day-to-day stuff that limits your growth. And, for the first while, it was just helping friends helping friends, or getting investment partners. And then, I actually had people ask me to, how they could work with me. And so I built a program around that. And to this day, it's just expanded. Now it's absolutely my favorite thing to do, even now when we buy property, because my favorite thing when getting properties was all the upfront stuff, the finding the deal, the analyzing deal, the financing the deal, the finding the investors. Once we owned it, it's like, yeah, okay, you're a baby now. I'm going to go find another one. That's just my personality. And so I realized that I can have that fun every day with my students, and I don't have to take care of the baby. You know what I mean? And that's the nice part about becoming a grandma. I just one granddaughter, but you know what they say. So, so that now I get to live vicariously through my students every day, be part of all that, and then it's their baby after, you know what I mean? So I feel like every single thing I've ever done in my life, including being a financial advisor and all that, has led me down to this coaching path because it's so fulfilling, rewarding. I love helping people hit those goals that's just kind of like a pipe dream when they start, and it's like, oh, and do it quickly too, because you know how real estate, you're dealing with big numbers, so it can happen a lot quicker. And when I tell people, yeah, I can get you to 5,000 a month in the next 12 months. What? And then when it happens, and people will say, well, yeah, other people, but not me. Then when it happens, it's like, oh, I had no idea. And that was kind of like us at the beginning. We had no idea. We had no idea what was possible.
But you have the right mindset.
Yeah. Just one foot in front of the other. And then being, like I said, being around the like-minded people and hiring the coach too was the other two big things that we did that really helped us. But I learned when I was a financial advisor. I hired my very first coach in 99 when I was still a financial advisor. And how that happened is we were bought out by a larger company, and they put us in a room in Scottsdale, Arizona, with all these $1 million a year producers. This is when I was earning $250,000, and it was like, holy cow, all these $1 million producers. And the guy on stage said, how many of you have a coach? And I looked around, and all the $1 million producers I'd met had a coach. So I went and hired a coach. Before I went home, I hired a coach. And so I've had one or more ever since 1999, never been without one. Recently, one of my mastermind members, who's also a fellow coach, gave me some stats. And he says, do you know that people who have no coaches generally earn under $100,000 a year? People who earn between $100,000 and $250,000 a year generally have one coach. If they earn between 250,000 and 500,000 a year, they probably have two coaches, and over 500,000, they probably have three or four. And I looked back in my history and I went, absolutely, that is absolute true. Where'd you get that stat? He says, it's my own stat just from working with students over the years. And I thought that's really powerful to know.
Yeah, I can see that. I can see that. And that's been a big part. I'm on all sorts of email chains. I'm sure you are too. And there's a lot of coaching, a lot of life coaching. And I found that, I guess, there's kind of a component for every type of coach, but, even studying your habits and what you're doing and how you're managing your time, and to have so few people have a second set of eyes on things that kind of comprise their days, and to get that kind of, insight from those that have walked the walk is truly invaluable. So, well, let me ask you one or two more questions, and I've got kind of a multi rapid fire question. I want to ask you.
Absolutely.
I told you I always have a portion of my podcast that I've got these things that I'm curious to what make people tick. So I'll save those here for just a minute. But people that want to get started, so people want to get started in real estate. Obviously, there are certain entry points that are common, and I think just from a mentality standpoint, starting with single family homes, maybe a dupe or try could certainly be in someone's thought process. But there are folks that are wanting to get in long term, try to acquire a portfolio. A lot of doors typically have this progression to get into the multi. So somebody comes to you and says, Edna, I want to get started in real estate. I'm not looking to flip. I really want to grow a portfolio. What do you advise them on? Do you encourage them to start with singles, then ultimately grow to multis, or do you have them start with the multis? And if so, how does someone get started that wants to invest in multifamily?
I encourage them to go right to multifamily, because you know what? People have asked us, what would you do differently? That's the only thing we'd have done differently. We still own all our houses because there's no point selling them. We can't get any more mortgages. But I've taken people from 0 to 72 doors in 2 years. That two young guys locally who still lived at home with their parents, they didn't even have their own mortgage, and I helped them get to 72 doors in 2 years. You don't have to start small, but you got to be able to think that, or you're going to struggle, right? These two young guys, they'd read the Robert Kiyosaki books. They knew that they wanted to go big, and they weren't scared, and they went out. They did everything I told them, and in 2 years they had 72 doors. So you can start big. You don't have to start with a house, but you have to have a mindset that's open to it, because I always say, if you think you can't, you're right. And if you think you can, you're right. But there's a few key things. One is, you got to get around like-minded people, because if you're around a whole bunch of people who say you can't, guess what? You can't, because they're going to tell you can't. If you get around people who are doing it, it's really hard to sit in the I can't, a seat very, very long, because it's like, well, if they can, I should be able to, right? So there's that. And then hire a coach, because it takes so much of your fear away. It was for us. Like, there was so much we didn't know. And when we'd make an offer and our coach would look at it, it was like, okay, so the offer's good. Yeah, the offer's good. And the numbers are good. Yeah, the numbers are good. Okay. And then what's next? Okay, well, next you take your mortgage broker. Okay, yeah, that makes sense. Take your, and they held my hand through every step and every fear and every challenge, and walked me through to the other side. And then it was like, oh, well, that wasn't so bad. But I would never want to have attempted it on my own. So those are the things that they got to do. It's a mindset shift first to even think that they can get into multi. I was lucky. I had mine in 1 day sitting in front of a realtor. I can do multi. Yeah, you can. Okay, write the offer. Most people, it takes them a lot longer to make that transition, but it's that simple. It's that easy once you decide,
Yep. Yep. Get the mindset right. So, all right. Well, let me rapid fire a couple questions for you, if I may. So, first and foremost, I love the pink hair. If I had any, it might be pink. Tell me, where'd the pink hair come from? Where'd that start?
I've got teenage daughters, and when they were like 12, 13, there was all this, like, add this color block at the bottom of their hair. And of course, my hair was always short, so I couldn't add a color block, but I got my hairdresser just put in a few highlights, and I got green, blue, and purple and pink the first time, and all the colors washed out except the pink. Like, the pink stuck, and I tried the other colors a couple more times, and like within a week or two they would be all gone, but the pink seemed to just stick. And then I just everywhere I go, people comment on me, I love your hair. I have little kids go by, candy floss. And it's like, it's now my signature, my pink everywhere I go. I go,
Yeah.
oh, I know you, I know you.
I mean, really, I could totally see that. It's an awesome distinguishing factor there. So, all right. So, next question. You mentioned when you were 16, you were kind of had humble beginnings. So, if there was one lesson in life that has served you well, clearly your mindset shift. I mean, I got to tell you that is, as I've come subconsciously kind of going through our talk here, that's just the dominating theme, because that's everything. It's all between your ears. Life is lived between your ears. You see, what you think about, you bring about, what you focus on, becomes more in your mind, and setting small goals, big goals. I mean, it's just what you've shared today, Edna, has just been amazing stuff. So I sure hope that the folks listening can appreciate that as well. But was there one life lesson or one situation, something you went through, something somebody shared with you, that you look back on and say, that really is something that I share with others, that maybe a pivot point? Anything jump out when I ask that question?
Well, I think my decision to study wealth as opposed to stay where I was a big one, even though I met with a lot of opposition, people trying to protect me, people that love me, you're kind of crazy, like what makes you think? But I started studying wealth. I read the books, I read Think and Grow Rich, like all the classics, different stuff like that. I still took me a while to really get there, but you never get there if you don't study it. So and becoming wealthy is a decision. It's just a decision. I still hear lots of people say, yeah, I don't really care if I'm wealthy. I just want to be comfortable. And I think, do you really? Or do you think it's not possible to become wealthy? Because you know what? Deciding to be comfortable and deciding to be wealthy, it's just a decision. Yep. Just a decision.
Couldn't agree more. All right. How about morning routine? Do you have a morning routine?
Oh, absolutely. I do. I wake up at 5:45, and as I get ready and brush my teeth and put my makeup on and stuff, I listen to different things on my earbuds. Like I'm really trying to get better at sales right now. So I'll listen to some objection handling. I might listen to somebody else's sales call. I listen to sometimes a self-image, like it changes up all the time. And I do that while I'm getting ready, make my coffee. And then I sit in my office and I write out my goals every single day. I'm so happy and grateful now. Sometimes I'm writing today. Right now, I'm writing it out 100 times because I'm making another mindset shift. 4 times my income last year, which I didn't even think was possible. And so I'm going to shoot for that again. But I got to get it into the subconscious, right? So I write it out every day. And my plan is to write out every day for 30 days. That one goal. Yeah. So cool. And because I need it to get in there, and I want it to get in there as fast as possible. And that's what I've learned that works for me. And then we actually went to the gym. So 3 days a week, we generally go to the gym. My girls go with me. They're 17 and 19, and we have a personal trainer. So then we went to the gym, come home, and then generally that's, I have a reading partner that I'm actually reading different things. One right now is we're reading the faith chapter out of Think and Grow Rich, as well as the one-page essay from the James Allen book about being serene and calm, so that's almost always a daily routine. I don't go to the gym every single day, just 3 days a week, but I'll have different coaches. I work with a mindset and spiritual coach once a week, and I have a mastermind another morning in the week. So I have some changes like that, but the first part pretty much every day, Saturday and Sunday included.
Love it. I tell you what, that is so cool to me, the power of the subconscious and to be able to manifest and James Allen, as a man thinketh, right? So shall he be. And that is like just resonating so much with me. I hope others as well. That's really good stuff. So, well, I guess my final question for you is, how do people get in touch with you if they're interested in working with you and kind of liking what they hear? How do they reach out to you, and what opportunities are there to work with you?
Sure. Well, my website's probably my best, and it's ednakeep.com. My email address is also edna@ednakeep.com, and I'm all over social media. I've got a very good marketing team, and I have YouTube ads, and I'm on Facebook and different stuff. So you can find me very easily if they plug in my name, even Google my name. And how I work with people is I teach people mindset, first of all, but how to become a multimillionaire real estate entrepreneur here first, and multifamily. So I have a whole course that teaches people about that. But I also have an introductory program that if people want to go through what I call it my 4-day challenge with me, to spend another 4 or 5 hours with me, just kind of understanding what that would take to go straight into multifamily. And I offer that almost monthly. And I can give you the link for that if you want it for your show notes. The next one starting February 14th. But I find a lot of people really get their eyes opened to what's possible in the multifamily world, and that they don't have to stick with houses, and that they can go larger. One of the ways, of course, is learning how to utilize other people's money, and that's all the stuff that I teach about that.
Fantastic. Fantastic. Well, I've got to say again, I've enjoyed this. Thank you so much for spending a few minutes with me. And I know that the folks that are listening are going to get a lot. And I got to tell you, I'm inspired over here. I mean, I've got to start writing my subconscious goals there. That's just a great that's a big takeaway for me. So anyway, you're a breath of fresh air. You're a great energy, and certainly a great inspiration. Love the pink hair, and I can see why people are attracted to you.
I should have got the name of your podcast, Little Pink Houses of America.
There you go.
Pink Houses of Canada.
That's it. So, well, like I said, I had the pink on. I knew I got your picture ahead of time. I said, I gotta wear it for honor. So, and thank you so much. I hope our paths get to cross again soon. And you've been an amazing guest. So thank you for your time.
My absolute pleasure.
All right, guys, it's been one more episode of the Real Estate Investors Money Matrix podcast. Thank you for tuning in. We will see you again very soon. I see you've been watching our videos, and I want to give you a big thank you. If you've ever wanted to get into real estate investing, there's never been a better time than now. Click the link below for more information on how you can work with myself and my team, or visit pinkaffiliates.com. That's pinkaffiliates.com. We have a variety of options for you to get started at whatever level you are interested in. Click the link below, visit pinkaffiliates.com, and see what Pink can do for you.